Hello and welcome to another episode of the Forex Form Guide, where we take a look at the major currency pairs through the lens of WD Gann's form reading. In this episode, we'll take a look at a few nice trades that the Australian dollar has given this week with very low risk entries. We'll check up on the British pound forecast from last week, and I've got a nice tight price forecast on the US dollar Japanese yen. That and plenty more on the Forex Form Guide. Let's get started. If you're new to the channel, welcome. This channel is dedicated to the works and teachings of the great WD Gann, and I've popped some videos at the top of the page that you might find helpful in getting started. And if you do find value in this or any of my videos, I'd really appreciate it if you could click on the like button and leave a comment. It does help the channel to grow and to push Gann's message out to more people. A quick disclaimer before we get going, this video is for educational and informational purposes only. It's not financial advice. Trade responsibly. So we'll start by looking at the Australian dollar, US dollar. The week unfolded pretty much exactly as I expected. We had the low last week at the end of the week on Friday, a little bit lower on Monday, but I think that was the cycle pivot low there. I was expecting a run up to the 25th of September. We had this high here on the 24th, and the market really started down on Thursday the 25th. And so far, we've made a 62.5% retracement of this range here. Now, I'm going to show you a couple of short trades in a moment. I think that we're going down from here. I have a little bit of concern around this 64.90 level. I'll talk about that in a moment. But looking on the big picture, on the monthly chart here, we've retested that trend line, looking like it may be a false up move on the monthly chart here. On the weekly chart, we've retraced up to 75%. We're now putting in an expanding range to the downside there. And this pattern over here, it doesn't look like a low to me. I could be wrong. If I'm wrong and the market is going up, I'd expect to see that market run up and then put in a higher bottom on top of that 50% milestone anyway. But it does look to me like the Aussie and the pound and the euro have some more downside in them, and that the US dollar yen has some more upside in it. I want to show you this top here on the 24th. I'm not going to explain everything on my chart. You can actually watch the form reading video that I put out a week or so ago, WD Gann's Gold Part 3 form reading. You can see that goes for 48 minutes. I know people like shorter YouTube videos, but there's plenty of good stuff in there, and that will actually explain a lot of what's going on here. But take a look at this setup here. Absolutely beautiful on the Australian dollar at that 66.27 level, precisely hitting a nice milestone. We had the 1x4 angle there. We had three sections up. We had a run up there, pull back, run up there, pull back, run up there. That's three equal sections in the market into a really nice tight setup there, giving you an excellent opportunity for a small risk entry on a trade. I often talk about these SMART trades. It's S-M-A-R-T. The S in SMART stands for small risk entry. And for me, it's the most important thing about a trade. You can have the best setup in the world, but if the risk is too large on the trade, the market has to do too much just to get you a decent reward to risk ratio. When you can get a setup like this, where you've got multiple things coming together to get you an exact or a near exact price, you can stick a stop loss 5 or 10 points away. Now, this is not advice, but think about the theory. If you've got such a tight pressure point there, you just need to study your market and see when the market makes setups like this, how far does it normally go through? Now, if it normally goes through, say, 20, 25 points, we have to allow a larger stop loss there. But if you can regularly see that a 10-point stop loss will hold, well, you can incorporate that into your trading system. I mean, look at this. It's just beautiful on the way out there. Look at this top there, bang, this top there, bang, this top there, bang. The harmony in that. People who say markets are random, take a look at this chart, take a look at that form reading video that I was just speaking about there. It's an absolute cracker. And a setup like that can occur in the direction of the trend or against the trend, but it's such a high quality, high probability setup, in my opinion. And at the end of the day, if you're wrong, it's one unit of risk, but because the entry is so small, the market doesn't have to go very far for you to actually make a decent reward to risk ratio on your trade. Now, let's say, for example, that you missed that. That happens in trading. The move happens. It runs off without you. You turn your computer on because you've been out in the morning or doing something with the family or otherwise engaged. Maybe you've got a full-time job, and that's fine. And sometimes a job is helpful because it gives you something to occupy yourself with rather than staring at the screen all day. With setups like this, that price point was identified hours and hours before it happened. You can set your order without having to sit in front of the computer, or you can just check the market every few hours as the market approaches it. But let's say that you missed that top. Well, the market had a run down there. You feel like you've missed out on the trade. Then it has a bit of a rally there. It came up to a 50% retracement there. That was another example of really good, strong harmony there. You can see it only went a few points past. I think it was 2 or 3 points past the top there. And then it turned around, bang, to the downside. So if you miss this setup here, you've got this one here, a nice 50% retracement. If you miss this one here, look at this little pullback here. If you zoom into a 4-minute chart, there's another little 50% retracement there. And people say, oh, ranges resistance cards, too basic. I need more than that. Well, yeah, you can have more than that, but these things are a great tool to have in your trading arsenal. And I'd encourage you to check out that Gann's Gold series because I do walk you through a lot of Gann's really cool techniques there. So as I said, it looks to me like the Aussie is going down. I have a little bit of suspicion here. I can see about 3 points of pressure at this 64.90 level should the market go down there. Regardless though, if the market is going to go up, once it has retraced past 50%, it nearly always, when it comes back above there, it will make a higher bottom on or around that 50% milestone. And that would be an area that I would watch if it does that for the market to potentially go higher. This 75% milestone here, that's what I call a point of no return. If that gets broken, I'd say that top gets taken out. And if that top gets taken out, we're up here, we're going higher. 72.5 cents would be my first stop there. After that, if we do go higher up there. So it'll be an interesting week. After this 25 September top, my next date wasn't until the 2nd of October. So theoretically, it should run down until at least Tuesday, which is the 30th of September, which would be 2 days before that date, maybe even a little bit further. So again, I'll be watching that milestone. And look, if we have a little bit of a run up there and another contracting range down there, that's something that I look for. Multiple contracting down ranges, or in this case, you've got to run down a smaller range. If you then had another smaller range, that's 2 consecutive contracting down ranges. Well, yeah, now it might be time to start thinking about a long trade. But when we have a look at the other markets as well, it's looking to me as if the Aussie dollar does have more to fall. Let's check out the pound US dollar now. I did a deep dive into this last week. So if you missed last week's episode, I did put a lot of really good stuff in there. I'll leave that for you to go through and dig through if you wish. I have actually hidden a fair bit across this channel, not really deliberately. I just from time to time, I think, oh, here's a little nugget that I'll share. And then over time, and as you can see, 103 videos now, but then over time, you've got 20, 30 pretty good nuggets just sitting there on the channel for anyone who bothers to go through and watch the videos and pay attention as you're watching them as well. But let's have a look at the pound. You can see on the daily chart down here, we had started running down last week. I said we'll probably early in the week have a little bit of a pullback and then continue down. That has happened over here. And as I said last week, I am targeting this 127 level as a medium-term target on the pound. Now, if the pound does run down into a level like that, you'd have to expect that it would take the Australian dollar down there with it. So far, as we project this range down here, or you can see it a little bit more clearly here on the weekly chart over there. But as we project that down, we've run down a little bit through the 50% milestone of that last range there in not much time there. We had about 30-something days up there, 34, 36, and only 6 days down. We're already all the way down here. It's looking pretty bearish. But look, as a trader, I'm more interested. People will say, what would you rather be, right or get in with a small risk entry? I would much rather get in with a small risk entry because I can be right and have a terrible entry and struggle to make much money on the trade. And in those examples with those large entries, large risk on entries, there's more emotion involved. You're more likely to jump out of the trade or lose patience with it. But a small risk entry just opens up so many doorways for you as a trader. And Gann certainly provides us with plenty of techniques to help us to get in with a small risk entry. Speaking of Gann, if you haven't seen it, this is page 46 of the Wall Street Stock Selector, where Gann lines up his charts side by side. And I spent about 20 minutes talking about this in the Gann's Gold series, part 2, Wheels Within Wheels. So I'd encourage you to check this out if this is new to you. But basically, set up your charts side by side, as we did last week, weekly, daily, and 4-hour side by side on the pound. I spoke about this bar last week on the weekly, closing near its low, very bearish. And the week that we've just seen continues that with another down bar there. Now, this weekly move down here, you can see, I haven't lined these up exactly because it gets a little bit messy. You've got to visualize a little bit. This weekly swing here, this is so far just into its second swing on the daily chart there. The market has run down a little bit of support under the 25% milestone and under the 50% milestone there and on the 75 there. So I'd say that that 100% target is a pretty good chance of being hit. On the 4-hour chart, potentially a little bit of an overbalance in price showing up here. You're hitting a couple of 50% milestones there. Look, if it does run up on Monday, Tuesday, and we do have an overbalance, well, that would be a contracting down range there. I still think that that 127 is on the cards. If we do run up from there, that overbalance there, if it pushes on and then we get a higher bottom there, well, you think about it, and a lot of traders will say, oh, it's running up now. But all it is it looks like it would then be confirming the end of this weekly downswing, and it would be starting a new weekly upswing into potentially a lower top there. As always, though, I always consider what if I'm wrong, and that's why I need to have a small risk on entry, because when I can get a small risk on entry, I can get to entry plus commission like that, and then if I'm wrong and the trade turns around on me, it doesn't bother me. I just move on to the next trade. But as you saw on the Australian dollar in those previous examples, there were plenty of trades on offer last week with very low risk entries. They are there. You just have to watch for them and wait for them and let the market unfold. Let it all come together. Sometimes you'll set up, you'll have a really tight level and the market doesn't quite get there and you miss out on the trade. That's fine too. In my opinion, it's better to miss out on the trade than to jump in with a terrible entry that's then really hard to recover from. Looking at the euro US dollar now, this one is interesting because it didn't double top as much as it broke that top there. And then it's pulled back, but it hasn't pulled back very far. See how it's only pulled back to the 50% milestone here of this run up. Now, yes, like the pound, it was about 34, 36 days up there, and we've had about 6 bars down to get to the 50% milestone. So I would suspect that that is going further, but that's an area that we have seen a little bit of buying coming in at the moment. So we'll wait and see what happens with that. But overall, it does look to me like the euro is having a bit of a pullback coming out of that 119 level that we've spoken about for several weeks, probably months leading into it, which was that top there on the daily chart. Remember, the pound and the Australian dollar so far have already retraced 62.5%, whereas the euro has only retraced 50% so far. Now, if you're familiar with the work of Frank Tubbs, Tubbs, Tubbs said if you're looking at a group of similar markets, so if you're an Australian and you trade the bank stocks, for example, ANZ, Commonwealth Bank, National Australia Bank, Westpac, etc. If you're looking at a similar group and, for example, 3 of them make double tops, but the 4th one makes a lower top, well, that 4th one making the lower top is weaker, and Tubbs said that would be the one that you'd want to short. In this case, the euro is probably the strongest one because it hasn't retraced as far in terms of percentages of that range up there as the Aussie and the pound has. So euro potentially looking a little bit stronger than those other 2 currencies there. Finally, we'll take a look at the US dollar, Japanese yen. Now, I've been talking about these triple bottoms for a long time. I do think that this market is going to head down and that we will take out those bottoms. But at the moment, we are looking like we might put in a higher bottom here on the monthly chart. Now, I spoke about this last week. I said we've made a 50% retracement. Often the market will repeat 100% of that range after making a 50% retracement and running up to 156. The trouble is, if I look at this big weekly swing down here, or this, it's really a monthly swing down here. I'm just using a weekly bar chart here. If I look at that, you can see over here, 156, it only pops up there at the 87.5% milestone. That's not a strong milestone that I would normally consider when gearing up for a trade. Also, it's past the 75% retracement. So I was a little bit concerned that it would also be above that trend line there. So above the trend line, past the 75% retracement, not a super tight cluster, not a strong milestone there. I wasn't sold on that last week. And look, I only had a quick look at it as I prepare for these Forex Form Guide videos. So it's not a market that I'm following day in, day out. But having a little bit more of a look at it this week, I did pick up something very interesting that I want to share with you. Have a look at this range here from our April low. That was 8.76 or 876.4 ticks, as you see here. So that was the first move that the US dollar yen made from that low. After it pulled back into a higher bottom here and started running up, wouldn't you know it, the next run up there ran 8.8 or 880 ticks, almost the exact same range, 4 ticks out there. Now, the pullbacks after those ranges, the first pullback was 653 ticks, a nice deep retracement there. The second one was 543 ticks, so it's smaller range down there. So we've had 2 sections up. We're now entering a 3rd section up. If we get a similar range up there, 880 compared to over here, 880 or 876, a 3rd section up would give us a price around 154.40. Now, at that price, 154.40, we'd be hitting the trend line up here. We'd be hitting that 12.5% retracement of that large range up there. We'd be hitting the 75% retracement of this weekly pullback here. We would have 3 sections up. Gann says after 3 sections, look for a definite indication of a change in trend. But all of a sudden, it starts to look a little bit cleaner and it starts to give us an area to target. Now, if you want to explore form reading in a bit more detail, as I said, I've done a 48-minute video there on that in the Gann's Gold series. That's all for this video. I hope that you found some value in it. If you did, all I'd ask is that you take a fraction of a second to hit the like button. And if you want to go above and beyond, leave a comment, say hi, ask a question, like other people's comments. It just shows the YouTube algorithm that there is some value in the video, that people are engaging, and the algorithm is then more likely to promote that video to other people. I'm a big fan of Gann's works. They've added a ton of value to my life. I think that they can add a lot of value to other people's lives as well. So I would like to spread that message as well and introduce more people around the world to the works of WD Gann. So again, if you can hit that like button, leave a comment, would really appreciate it. So again, if you could hit the like button, like other people's comments, leave a comment, reply to someone's comment, get a bit of action happening on the channel, that'd be much appreciated. That's all for this week. I hope you have a fantastic week ahead. I'll see you next Sunday night for the next episode of the Forex Form Guide. Until then, all the best with your trading and bye for now. Now, for those who stayed around for the post-credit scene, these are very rare, but I have left a few post-credit scenes over the course of 100 plus videos. The next 3 weeks on the Australian dollar, whether it goes up or whether it goes down, I think is going to be a really strong move. I know I said that at the beginning of the year. I was looking for September to be a strong move. That hasn't worked out. I have to debrief on that. But that was using a larger cycle. I have fewer repeats for that cycle. Obviously, you've got X amount of data to work with. I have fewer repeats for that. So, and you're dealing with larger numbers. So if I've made a mistake there, it's a little bit harder to pick up. Using a smaller law of vibration cycle, I've got repeat after repeat after repeat, showing me a very strong move due from the 26th of September through to the 18th of October. So a little over 3 weeks. Now, to me, it looks like this market is heading down. And in fact, a lot of those repeats are down moves, but it could go up as well. Whichever way it chooses to go, I think it could actually be a nice little 3-week window for trading. Now, that doesn't mean that you have to jump in there on Monday, but from Monday, start having a look, build a case for which way you think the market's going, and then look for those small risk entries. And it could be a good time to use them. Could be. I say could be. Remember the disclaimer at the start. Now, I did give those dates out a few weeks back, but if you've forgotten, it was September 26th through to the 18th of October, and then the 3rd of November after that would be the next turning date. All the best and bye for now.